And just hello to everyone. It's Travis over at Village to Village Network. And today we are joined by Cora Hume from the Consumer Financial Protection Bureau. Hold on, I'm going to start muting some people. And just as a reminder, please keep yourself on mute, at least for now. There might be opportunities for questions at the end. Or if you have a pressing question, you can always use the chat feature and type your question in there. But yeah, we're going to listen to Cora tell us about I guess, the ins and outs of reverse mortgages. I don't know. I'm here to learn too. So without further ado, Cora, take it away.
Great. Thank you so much. My name is Cora Hume. I'm an attorney with the Office for Older Americans.
Sorry, Cora, you got muted. Could you unmute, please?
Better? Okay. I'll start again. Hello, my name is Cora Hume. I'm an attorney at the Consumer Financial Protection Bureau's Office for Older Americans. We're going to walk through today what is a reverse mortgage and how one works. And my colleague Erin Shaithi is going to be advancing the slides for me. So just bear with us as we muddle through. So let me pull up my notes. Okay, so let's start with a disclaimer that we have to tell you as a federal employee. This presentation is on behalf of the Consumer Financial Protection Bureau, but it's not legal advice. The opinions are my own, not the Bureau's, and this slide deck is in support of a larger discussion, so it shouldn't be taken on its own. Okay, done that. And here's what we're going to go over today. We're going to give a very brief background on the CFPB, who we are and what we do. Then I'm going to really dive into reverse mortgage loans, what they are and how they work. And then I'm going to point you into to some of our resources that you can look into on your own. Okay? So who we are and what we do. Let's go to the next slide. So the Bureau was created in 2010 after the last financial crisis that happened in 2007, 2008. Dodd-Frank Wall Street Reform and Consumer Protection Act was what created the Bureau. It was created to basically have one agency focus on consumer protection. Before Dodd-Frank, it was spread across many agencies, and now the sole mission of the Bureau is to protect consumers. Okay, next slide. Okay, so here we are with our mission. The Bureau's mission is to create tools that empower consumers to shop for financial products and services that work best for them, to enforce consumer protection laws, including unfair and deceptive acts and practices, and to educate consumers by giving them tools that allow them to make smart financial decisions. So those are our missions, and my office, the Office for Older Americans, is under the Office of Consumer Education and Engagement. So our goal is to work on issues for persons who are 62 and older. We want to keep a lookout for financial harm, but also to produce educational materials that you can then use to empower yourselves. Okay. So we're going to kick into what is a reverse mortgage. And in terms of thinking about reverse mortgages, I just wanted to flag that in 2019, approximately 80% of adults aged 65 and older own their homes. And so the question is, as you age, what do you do with your home and the equity that you've built up over time? And it's an emotional decision. Most of us have been in our homes for years, and it's a financial decision. Older homeowners are on a fixed income, and so a lot of older homeowners, a majority of older homeowners, want to age in place, meaning they want to stay in their home. But what we really need to think about is it financially and physically sustainable, and is that the best choice? And one piece of that puzzle, or one option, is a reverse mortgage. And a reverse mortgage allows older homeowners to age in place. And what we really want to focus on is giving you the information so you can decide whether that's a good choice for you. So we're going to dive into the details right now. Okay, so this is a video that I hope to show. Aaron, I think I need you to click on the YouTube, and it really lays out briefly what a reverse mortgage is, and then we're going to dive into the details. Let's see if we can get the video up. Let's see if it works. Is there sound? Maybe not. Okay, well, we don't have to do the video since it doesn't look like the sound is going to work, but we'll go into the details of reverse mortgages anyways. This video can be found on our website on reverse mortgage, consumerfinance.gov/reverse mortgage, but we'll get you the slides and you can look at that video on your own. So when we talk about reverse mortgages, we're talking about two kinds of reverse mortgages. The most common kind is a home equity conversion mortgage. It's insured by the federal government, the U.S. Department of Housing and Urban Development's Federal Housing Administration. And again, that's the most common type of reverse mortgage, and that's what we're going to be talking about today. There is another kind of reverse mortgage, and that's a private reverse mortgage that we call proprietary reverse mortgages. These are not insured by the federal government, and they're typically designed for like bigger jumbo type loans. So usually when you're hearing reverse mortgage, you're hearing about what we call HECMs, home equity conversion mortgages. Okay, so let's see here. In terms of traditional mortgages, this slide shows how one works, right? You borrow money, you pay for your home at the time of purchase, you make monthly payments, so you build equity over time, and your debt decreases over time. So that's what this graphic shows. Now let's look at what a reverse mortgage is. Okay, this is a traditional reverse mortgage. It is a loan. And here you need to be 62 and older to be to get out a reverse mortgage. You do borrow money using your equity in a home, just like a forward mortgage, but you don't have to make monthly payments. So, but the interest and fees still accrue even though you're not paying a monthly payment. So with reverse mortgages, this shows that your equity decreases over time as your balance goes up. Okay. So we found that a lot of reverse mortgages are used to pay for daily expenses. In this slide, I wanted to highlight for you because the complaints that are submitted to the Consumer Financial Protection Bureau reflect that a lot of older homeowners who have reverse mortgages don't know that it's a loan. So I really want to emphasize with this slide that it is a loan, and it has interest and fees that build every month, and your loan balance grows over time as opposed to goes down over time. Okay. So how does a reverse mortgage work if you still have a traditional mortgage? So a lot of people who want a reverse mortgage still have a traditional mortgage. So what you're doing is you're basically trading one loan for another, okay? And the money that you get from a reverse mortgage will go to pay off your existing mortgage, okay? And anything left over is then what you can use as a line of credit or a lump sum. But if you have a high mortgage already, in your traditional existing mortgage, most of your reverse mortgage may be used to pay off that loan, and you won't have much left for this line of credit. Okay, so it really depends on how much of your existing mortgage you have. Okay. So, like I said, reverse mortgages, you don't make a monthly payment, but you do have ongoing responsibilities under the loan. The first one is, and they're in no particular order, the first one is occupancy. You have to occupy your home as your principal residence for a majority of the year, okay? So you can't be absent for more than a majority of the year for non-medical reasons, and you cannot be absent for more than 12 months for medical reasons. So if you have to go into rehab, or the homeowner has to go into rehab, or the hospital, they can't be absent for more than 12 months. Because then it's not considered a principal residence. Another responsibility under the loan is to keeping the home in good condition. So the homeowner has to make sure that they have enough money to keep the home in good condition. And lastly, and this is where a lot of people get tripped up, is they have to continue to pay property taxes and insurance, okay, as well as HOA fees. For loans that were taken out, reverse mortgages that were taken out after 2015, before the loan is given, the homeowner is evaluated to make sure that they have enough money to cover these property charges, property insurance, and homeowner's insurance and property taxes. So if the homeowner doesn't have enough money to cover these, there can be a portion of the reverse mortgage money set aside to pay for these over time. But the homeowner has to understand that if they don't pay the taxes and insurance, their loan can go into default. Okay, so with reverse mortgages, the ads say, the advertisements often talk about, you know, you can stay in your home forever. Well, you can still get foreclosed upon with a reverse mortgage. And these are the reasons why older homeowners default on their reverse mortgages, because they don't understand or don't know their ongoing obligations. Okay, how much can I borrow? So the borrowing limit is set by interest rate, the value of the home, and the age of the borrower. And if the borrower is married, the age of the spouse who's ever younger, okay? And this picture shows that borrowers who are older have a higher priced home and a lower interest rate. They'll be able to borrow more than someone who is younger, has a lower valued home or a higher interest rate. So HUD looks at this and, you know, looks about how much you can borrow by saying, look, you can never owe more than the house is worth. And so they calculate how much they think the house will be worth over time and make sure that you can't borrow more than that, because HUD is going to cover the difference if you borrow more than the house is worth. Okay, next line. So this I'm not going to go deeply into this, but the credit line growth feature essentially shows you that if you take out all the equity that you can right from the bat, you don't have a line of credit that can build over time. So it's really important to realize that the more you take out, the less opportunity there'll be left in the bank, you know, in the pot to grow over time. So I just wanted to flag that there's a credit line growth feature to reverse mortgages if you leave it as a credit line versus a lump sum. Okay. How much will it cost? An important question. Reverse mortgages are expensive. They're expensive loans. They're ongoing costs and they're upfront costs. So like a traditional mortgage, loans, the repayment includes not just money borrowed, but interest and fees. But the upfront costs include origination fees, just like a traditional mortgage, real estate closing costs, also like a traditional mortgage, and then something we call mortgage insurance premiums. And so because HUD insures this loan, you have to pay insurance to them. It's a fund that you know, you have to pay upfront and ongoing. And so it's 2% of the loan upfront that you will have to pay in mortgage insurance premiums. The next slide talks about the ongoing costs. So the ongoing costs are, again, interest every month, the mortgage insurance premiums, which is going to be 0.5% on a monthly basis, and the servicing fees. And I really like this picture because it shows that the costs are compounding, which means that the loan balance each month will grow over time because these fees are added each month. Okay, so the interest and fees are added each month to the balance of the loan, and they grow over time. So that shows this in a picture graphically about how these interest and fees grow. They're compounding. Okay. So you have three options in terms of receiving loan proceeds. So we've talked about how much you can borrow, which is a calculation that's going to be individual to you based on your interest and your home value and your age. But now you have a number, let's say, and this is how you would receive the loan proceeds. So you can have a line of credit, and this is at an adjustable interest rate. And this is the least expensive option because you're only going to get charged interest and fees on the amount that you withdraw, the amount that you're needed. This basically, you borrow what you need from this line of credit and the rest of it stays there, and when you need it, you can use it again. There's also the monthly payout option, which has a tenure or term options. The term option is you receive fixed monthly payments for X amount of time. Let's say you have a certain pot of money and you know that, and they do the calculations and they say for the next 10 years, every month you can receive this amount. Or it can be a 10-year one where you can receive a fixed monthly payout for as long as the money lasts. So those are the two options for the monthly payout. This is a little bit, this is less expensive than the lump sum. It's a little more expensive than the line of credit because you're borrowing each month. But the lump sum, which is the fixed interest rate, is really the most expensive loan that you can get with reverse mortgages. So it gives you all that equity that you can borrow right off the bat. And that is super expensive because, again, it's compounding. So you borrow the largest amount of money right up front, and those interest and free fees and mortgage insurance are added to the balance each month. So it's going to be an expensive loan. The amount you can borrow usually is lower. HUD has limited how much you can take out in lump sum, in part because early on in reverse mortgages, older homeowners were taking out all their equity, let's say at 62, and then they had no safety net. You know, most people live another 20, 30 years. So HUD wanted to really discourage these lump sum withdrawals, and so they limit how much you can take out. Okay, so let's see. How can a reverse mortgage affect people living with me? So if you're married, your spouse can be your co-borrower if they're 62 or older. So there's lots of confusion around this. There's whether the spouse is a borrower or not. And so if your spouse is a borrower, it's a lot less confusing because they have equal rights to you. Okay, so co-borrowers have equal rights, equal obligations to fulfill the loan, and equal access to the money that is received from the reverse mortgage. So if the when the borrower dies, when one of the borrower dies, the co-borrower is still the co-borrower and still has access to all the funds and still must meet all the responsibilities of the loan. In general, it's a good idea to make your spouse a co-borrower. It's just a lot less complicated in terms of reverse mortgages. Okay. The next question is, what if my spouse isn't a co-borrower on the reverse mortgage? So this is called, in the terms of reverse mortgages, a non-borrowing spouse. And non-borrowing spouses have to meet the requirements that HUD sets in order to be able to stay in the home after the borrower dies. When they meet those requirements, they become a qualified non-borrowing spouse. They don't have any access to reverse mortgage funds, but they can stay in the home. If they don't meet the requirements that HUD sets forth, then they have to leave. So I'm not going to go into detail about these requirements. You can find them. They're complicated because it depends on when the loan was taken out, but it's up on our website, and I'll give you that information. But again, realize that a non-borrowing spouse has to meet the HUD obligations, and if they don't, then they'll be required to leave the home. One other thing to note, if the borrower gets married after getting the reverse mortgage, that spouse has no right to stay in the home after the borrower dies. They're not considered a non-borrowing spouse unless there's a new reverse mortgage taken out. So again, if a borrower gets married to someone after a reverse mortgage, that spouse doesn't have any rights to stay in the home. Okay. So the last one is, what if you live with someone who's 62 but not your spouse? And when the borrower dies, they have to move out unless they're the heir. And if they are the heir, they have to pay off the loan or pay 95% of the fair market value. So we'll get into that a little bit later. But in general, a person who's living with you who is not an heir or can't afford to pay off the loan will have to move. And so if you're taking out a reverse mortgage, this needs to be a consideration, especially when kids or some multi-generational families are living together. If the reverse mortgage borrower dies, there's no rights to stay in the home. Okay. So what happens if you want to sell your home? The average length of a reverse mortgage is about 7 years. So a lot of people think that they're going to stay in their home forever, but things change, you know, and some people want to move closer to their home, their family. Some think this is too much for me to handle anymore, or I don't want to do the yard work anymore. I want to downsize, or I just want to lower expenses. So realize that when you take out a reverse mortgage, you might not want to keep it forever. So if you want to sell your home, you know, you have to think about, well, we'll go to the next slide, really. Erin, yeah, so if you sell your home for more than the balance of your loan, you pay off the loan just like you would a forward mortgage or a traditional mortgage, and you get to keep the difference, right? And so that's what this graphic shows. The next slide shows, though, that if you owe more on your reverse mortgage than your home is worth, you sell your home for the appraised fair market value, okay? And you pay off whatever that money goes to the loan. And then HUD, that insurance fund that you've been paying into, pays the difference. So you will never owe more than your home is worth, okay? So that's an important thing to remember. Let's see, next slide. So here we go. What happens to my home when I pass away? And there's a lot of confusion around this. A lot of family members don't know that their you know, parent or grandparent has taken out a reverse mortgage. They think they're going to inherit the home. Things to think about. So the first image shows that an heir can sell the home, and if it's more than the amount owed, they pay off the home, they sell it, they pay off the loan, and they get to keep the difference, okay? If the heir sells the home and it doesn't meet what is owed, the insurance fund will cover the difference. And then if the heir wants to keep the home, they have to pay either the amount owed or 95% of the appraised value, whichever is less. So the heir will have to figure out how to pay off the loan or 95% of the appraised value in order to keep the home. So it's not a given that the heirs will inherit the home. Reverse mortgages usually mean that there will be no ownership of the home after the borrower dies. Okay. Let's see. Other options. So we just want to talk about briefly that reverse mortgages aren't the only options out there. And there are other ones. So for example, if you're 62, it might make sense to wait until you're older to take out a reverse mortgage. If you take it out too young, the amount of equity that you can borrow against might run out. You could take out a home equity loan. Obviously, that comes with qualifying for a home equity loan. You will have to make monthly payments. So unlike a reverse mortgage where you don't have to make monthly payments, your home equity loan would have to do that. You'd have to make these monthly payments, but it might be a cheaper option. You can refinance. Instead of taking out a reverse mortgage, maybe you want to refinance your loan. Interest rates are still really low. But you need to think about, you know, if you're 62, you don't want to take out a 30-year mortgage. That might put you in a bind down the road, right? But refinancing is an option. Also downsizing. For my parents, their house is huge. I don't think they're going to want to stay in that house forever. So thinking about a smaller home that might be more manageable, less work, less upkeep. Upkeep is expensive, and the cost of upkeep doesn't change as you age. So your income becomes fixed, but all the costs of your home continue to arise. So that doesn't change. And then also just thinking about lowering expenses. You know, maybe we have seen people take out reverse mortgages because they need help, let's say, paying for utilities or taxes. There's a lot of programs out there at the state level that could help older homeowners with these expenses. So exploring what options are offered through your state to maybe help handle some of your finances that are taxing. Even for repairs, there are funds out there that are for seniors to do home repairs or to make it accessible, more accessible. So again, if the goal is to lower expenses, reverse mortgages might not be the best option. And you can, in terms of finding these other programs at the state level, you can find that through the Administration on Community Living. That's always a good place to look. Okay, so lastly, I just want to touch on reverse mortgage resources that we have. Let's see. So we have a couple resources out there for consumers on reverse mortgage. So the first one is Considering a Reverse Mortgage Guide. And you can see it in the bottom, this green address. That's where you can find everything I'm talking about. So that's the best place to go. It's our clearinghouse on reverse mortgage issues or products. But considering a reverse mortgage is a very basic guide on what is a reverse mortgage. It gives you the elevator pitch. It gives you the basics. The reverse mortgage discussion guide, all the graphics I just showed you today came from that guide. So this is a more in-depth guide that walks a homeowner through what is a reverse mortgage through graphics and text, and is a great guide for really digging in and figuring things out. Once you have a reverse mortgage, if you take one out, we have guides for older homeowners who are reverse mortgage borrowers. So a new one just came out called You Have a Reverse Mortgage, Know Your Rights and Responsibilities. And this explains the ongoing responsibilities that homeowners need to have when they have a reverse mortgage. And then what happens if you're having trouble in terms of, if you get a default notice, where do you get help? What can you do? What happens if you can't pay your property taxes? What can you do? And then we've heard of from some legal services attorneys in various states that have been hit by a natural disaster, how do older homeowners navigate keeping up with their loan obligations after being hit by a natural disaster. So we have a guide on that too. And I actually, well, here's how you can find us. There's the contact for our office, as well as our contact or our website for our Older Americans page, which has tons of resources on frauds and scams, but also on reverse mortgages. There's also a COVID-specific website that you can link through consumerfinance.gov to find resources that relate to COVID. And then the reverse mortgage is consumerfinance.gov. And one thing to mention about COVID is we did put out a blog. HUD and the CFPB and the FTC all put out information that right now, as people become economically strained, there are reverse mortgage scams out there targeting older homeowners. It might be from a family member who convinces the older homeowner to take out a loan and give them the proceeds. It might be identity theft. It might be a contractor who said, I see you need a new roof. This is the best way to pay for it. During COVID times, things are strapped. So just be aware of that. Ways to think about it is don't ever feel pressured into taking any kind of loan. Talk to more than one lender is always a good idea. You can always seek help from another family member to talk it over, or a friend being like, this doesn't sound right, or this sounds too good to be true. As a former legal services attorney, I always told my clients, if it's too good to be true, then it really is too good to be true. So just be aware that, during COVID times, older homeowners and older consumers are really being targeted for all sorts of scams. So just be overly cautious. Make sure you know what you're getting yourself into, and ask for lots of questions, and come to our site our website to find out more about that. So that's it for my presentation. I don't know if anyone has any questions.
Anyone does have questions, go ahead and unmute yourself, or feel free to use the chat. I'll monitor the chat box. Oh, someone does have a question, Cora.
Okay.
Let's see here. Julie Pence says, what happens when you die if you have a reverse mortgage but don't have any heirs, no children, and you still owe on the reverse mortgage?
Good question. So HUD covers the difference. That's what the insurance fund is for. So they can't go after your estate. Really, you can never owe more, and the borrower is dead. So there's nothing that they can get from you. So HUD will cover the difference. That's why there's that insurance fund.
Yes, and I see Rains Cohen has a question. Go ahead and unmute.
Good morning or good afternoon, as case may be, and thank you so much. It's great to have this kind of info. We've got a lot of people with questions, and so this helps a bunch. Start out of there. And so I'm a member, actually a volunteer with Ashby Village in Berkeley, California. But what we've been working on with a neighbor who she well qualified for reverse mortgage and actually did her financial planning around it. But for technical reasons couldn't qualify. The property couldn't qualify for the HUD-backed reverse mortgage. So we've been putting together essentially a mutual aid fund, and it's a tool that functions like a crowdfunded reverse mortgage. It doesn't have the benefit of the insurance, but it does have the community support, and it seems like it's ended up being so much more than the financial aspect. So the counseling, the engagement, we've all, not just the recipient, have gotten a lot out of it. And
Cool.
so technically, it's a private reverse mortgage, but not for a big home, expensive home. And I just we're interested in making sure we're doing it in ways that are safe and don't get classified as a scam. It's been with lots of outside advice and consultation. Do you have any advice for people doing this kind of thing?
I think it's going to be really, my advice would be talk to a legal services attorney or talk to an attorney to make sure you're not violating any state or federal laws. Good intentions doesn't mean that the law is being followed. So I would seek legal advice. It's such a specific situation that it's hard to give general advice on that, but that's great that you're helping her out.
We're hoping it's something that can become more replicated, especially in villages.
Oh, that's a great idea. Yeah. Interesting idea. Yeah. It's probably cheaper than a traditional reverse mortgage as well, is my guess. There's another question through chat. When I sell the house with a reverse mortgage, how is capital gains tax calculated? I don't know that. I don't do tax issues, so I apologize. I don't know how capital gains is taxed on that. You should probably ask an accountant on that one. I haven't come across that issue. All right. Well, thank you for your time. Yeah.
I'm sorry, this is Eddie Rivas.
Hi.
Hi, a quick question. I saw you had a complaint phone number, TTY for it, and you had email or web addresses for your resources, but is there a way for someone to be able to call into your offices to just have a conversation and get some guidance, or is that really above and beyond what you guys are staffed for?
Yeah, to scale, we can't scale that. So there is, if you want to file a complaint, if you're having an issue on a financial product or service, you can talk to the call center on that. In terms of seeking advice, I would talk to your area agency on aging, and they can get you in touch with, if it's a housing issue, housing counselors can do it. If it's a debt issue, counseling on that, just a flag for you on the side. There's tons of debt scams out there, debt settlement scams going on these days. But yeah, we don't do individual advice. I wish we did. Legal services is another great way to go. And your community living is also one. So let me see. Administration for Community Living. ACL.
Okay, so the area agency on aging is basically the point.
Yeah, I would start with area agency on aging. They're going to have the resources to direct you to that are at a grassroots level too. Yeah. So I think that's the best place to go. Yeah.
Thanks. Good presentation. Appreciate it.
Thank you. Appreciate it. Let's see. In the chat, it says, just a tip, people may not realize that reverse mortgages are loans, not income, so they often don't affect eligibility programs. That's true, like Medicaid, if you structure them appropriately. Yeah. So right, it won't go into your calculation of Medicaid, the amount of money that you're receiving as a reverse mortgage. That's right. That's an important point. Thank you. And another consideration that people should take while aging in place, there's a big push now for aging in place. As a result of COVID, there is a fear of congregate care, given that, congregate care was hit very hard by the virus. There's also, families that are having to live together more for economic purposes, or family contributions might have gone away when someone's gotten laid off because of COVID. And so there's this push to age in place, but, you know, one thing to also think about, not only financially and emotionally, is physically, you know, as older homeowners age, what kind of supports are going to be in the house? Is there going to be home care? How can I afford home care? So these are, you know, these are big items that need to be considered before entering something like a reverse mortgage. And I don't want to say that reverse mortgages don't make sense. For some people, they really do. But we want people to go in eyes wide open and understand the product before they get locked into it, because it's not meant for everyone. Yes, this presentation is being recorded. Someone just asked that, so yes. Thank you. All right. Oh, wait, here's another message coming in. Yep, so they put the website on the chat box, consumerfinance.gov. And, you know, there's great resources there. If you need something, you can also contact the Office of Older Americans if there's a resource that you're looking for and you can't find. Also, just to say, all our resources can be downloaded for free and ordered. So, like, say you live in a building with lots of older consumers, you can order 25 copies and hand them out to your friends. It's all free. Most of our guides are in Spanish. If they're not in Spanish yet, they're being translated. So as much as you can get this out and educate your friends and your family about this, that's how we protect people from scams and from entering products that don't make sense for them. So, last question I think is this. Let's see, my parents have a reverse mortgage. They did about 15 years ago. My mom is still living in the home, but my dad is deceased. If I understand correct, my mom can still live in the home. So I assume your mom, if your father has already passed away, your mom qualified under HUD rules as a qualified non-borrowing spouse if she wasn't the co-borrower. I don't know if your mom is a co-borrower. But she, you know, the servicer, the person who maintains the loan, would be notified that your father passed away. So there should have been a correspondence sent to them, to your mother, about how to navigate and qualify as a non-borrowing spouse. If there are problems with your mother staying in the home, you can always file a complaint with the Consumer Financial Protection Bureau, and we'll get a response for you from the company. So oftentimes, as we all know, it's sometimes hard to get an answer or a live person. And so filing a complaint will get you an answer, at least, to help you navigate that. If you're filing on behalf of someone else, you need their permission to do so, and you need to provide documentation. So if you're filing on behalf of your mother, you have to have a letter saying that you're representing her. Otherwise, you won't get anything. But this goes across all products. So, you know, if you can't get an answer from your bank, file a complaint, and you'll get a response usually within about 15 days. So, all right. Well, thank you so much. I think that's it. All right. Take care, everyone. Bye.
Thank you, Cora.